Hey everybody, it is Wes with Pikes Peak Trades, and what a crazy 2 weeks it's been. We didn't see the seasonal Thanksgiving strength, an ugly, ugly day in the markets, especially for growth stocks, and we're left to wonder where we're at. Where are we going from here? Is the 50 SMA touches on SPX and QQQ just like it was in late September, early October, and we're going to recover quickly? Or is this the beginning of something much worse through the month of December? And I'm going to take you through my stance on this. Going to begin here with closing values on NYMO and VIX and the S&P in relation to their Bollinger Bands. And I had tweeted right before the close that I didn't actually think bulls wanted the rally. And what I'm talking about here are some triggers that I look for in oversold conditions. A very, very strong bounce indicator is when the VIX closes above its upper BB and the next day closes within it. Oh, that happened Wednesday and Thursday. But then the day after it closes lower. Oops, that did not happen today. This VIX is green, but notice it's within the upper BB. In other words, we don't have a chance based on today's readings to try to get this signal to trigger Monday and Tuesday. And so I'm not a believer in today's end of day rally. And in looking at the weekly candles and looking at even some short-term setups, I have changed my primary counts to short to intermediate term bearish. Now, I hope I'm wrong, because it is way easier to make money if you're a bull than you're a bear, as we've seen over the last 18 months. But I sense a character change in the market. And I'm going to try to take you through a little bit of that evidence, because that's what it's about. It's about the weight of evidence. It's not about my opinion. The market doesn't care what I think or feel. We're just looking at some indicators. Okay, now also along this line of thinking, another really good buy trigger is when the SPX closes below its lower BB, like happened on Wednesday, and then back within it, like happened on Thursday, but then close higher the next day. And oops, did not happen. The SPX was lower, but it was not beneath its lower BB. See, these triggers that I look for, this is exactly what triggered in October. In September, October, this triggered where we had VIX outside, VIX closed back within, VIX closed lower. And that was my clue that we were ready to rally. This is not happening right now. Okay, now I'll try to give you a little bit of evidence the other way as well, because there are some technicals that suggest that we could have put in a significant low, and one of those is the NYMO. The NYMO did close higher today than we did on November 26th, with the S&P at a lower level than the 26th. Okay, lower closing level. So that is a little bit of bullish evidence, and I will balance a little bit of things through as we go. Okay, now I'm going to take you through the main ETFs and indices. We're going to jump a little bit between bad to better. And so that means we've got to start with the really bad. We've got to start with growth stocks. So this is ARKK. And in looking at this chart, the monthly and then the weekly, would you say that there's evidence to indicate that we're bottoming? So far in just early December, we've sliced through the 21 EMA and we're approaching the 34 EMA. No signs of bottoming on the MACD or RSI. In fact, they are accelerating downwards at a 45-degree angle. That is not what you want to see. I haven't changed the colors yet, but I actually think we're going lower. I think the super cycle target is what's happening right now in growth. You're seeing it all over individual names. Just ugly, ugly price action. Zoom, Roku, T.coin. Shop today was ugly, although it's had some relative strength in the sector. Tesla with an ugly close. We'll talk about that. So taking you in here to the weekly, is there any evidence in here on the weekly that we're bottoming? Now, the only thing you could say is that we're in very oversold territory here. If I kind of scrunch this to see when was the last time we were this oversold in the RSI, it's got to take you all the way back here into the COVID lows. Okay, so notice on those COVID lows, we didn't have divergence on that low. But look, what we did get is we got a weekly reversal candle. So let's come back up here. Does this look to you like a weekly reversal candle? No, that is a bears in control candle. I don't see signs of a significant bottom. Now, what could be happening is that within this bearish red count, we're ready for a bounce. And that is certainly possible. The way that I've fibbed this out, we could see a wave 4 bounce early in the week, and I'll show you what I think that would look like on IWM, SPX, and QQQ, but I actually think we're going lower. In fact, if I decide that I'm ready to be involved in active shorting, a rejection at this lost diagonal support, which happened this week, that would be my place to try to trigger a short in ARKK. Okay, even into the short term, there is some divergence on these short-term indicators, only the RSI, not the MACD. What I would need to point out to you, though, is that relying on short-term divergences, whether it's a Williams percent R or a MACD or an RSI, whatever it is, when the market has turned character and the sellers have taken over during the day, which we're seeing happen, those indicators get wiped out. And it is a fool's errand. It's a recipe to blow up if you try to buy on those short-term indicators when we're looking at longer-term time frames that are potentially switching. Okay, let's move into IWM. And so we look at the month here on IWM within this range that's gone all the way back to January of this year. And yes, the month is young, but what is starting to happen is we're starting to lose MA support, and we're starting to see these EMAs curl over. Okay, now that is how all really bad corrections begin. It's way too early to say on this monthly candle that this is how December is going to finish, but what I'm suggesting to you is we need to be at least aware of the possibility that this could have a very disappointing bearish outcome. Okay, so what needs to happen immediately is it has to recover these longer time frame MAs. So on IWM, it's got to get decisively back above 218. If I look here into the weekly did show a bounce off the close, but notice this week we sliced through moving averages just like a hot knife through butter. And that is a bear trait. Okay, so the 8, the 21, the 34, and the 50-week SMA all just got demolished. And if we look at behavior, that is the kind of behavior that happens when things start rolling over. So I got to take you back and I got to show you that's the kind of behavior that happened in October of 2018. We're seeing a rolling over of the MAs. We're seeing a slicing through of the MAs, and that's what leads to the multi-week, multi-month correction. Everyone hates to make a comparison to Feb and March during the COVID crash. I'm not showing you opinions. I'm just showing you data. This week just sliced through, and it continued. Okay, so obviously what has to happen? They got to get recaptured next week. That's the bottom line. And where would that occur? You need to see IWM close next week at the minimum around 223. 222 to 223 to close would get me to change and start thinking back that what I've had in black that's now a purple bullish alt could actually happen over the next 2 months. I have changed IWM into a bearish count. This to me is that I don't really see how you can say that that's a good look. So I think the best that bulls can hope for right now in IWM is the B wave bounce. Okay, just like ARKK, a wave 4 bounce. So if there's a bounce back into these, the fib and the MA area, okay, I think I'm actually going to be looking to short. Okay, so there is also the possibility that we're not done here, that the end of day rally was a sucker's rally and we're actually not done in wave A. And I've left that possibility in here that we're not actually done. Okay, so I would leave it here with these two. Yes, we could see a bounce next week. It's very possible. We're seeing divergence on the short term. But I want to leave in the possibility that Monday we actually get a very disappointing resolution. Okay, so we've gone from the worst to bad, but a little bit better. We could get better if we talked about XLF and DIA. So mix in here a little bit of good news. The good news is that neither of these have lost significant monthly support. And in fact, today, the good news today was that you saw higher lows today. So if I just look at the DIA daily, maybe that's a bullish candle. And we certainly didn't go lower than Wednesday or Thursday. Okay, so that's a little bit of some evidence that possibly we're starting to establish a new bull move. Okay. But my overall thesis is that the character of the market has changed. So could this be a hammer that's going to recover in DIA? Yes, it could. But losing on a consecutive weekly basis, the 8 and the 21 EMAs, that's how big corrections begin. Okay, so until it's recovered, I'm going to have to say that I'm looking for more downside. And what I think the downside would look like in DIA is that we've put in here a leading diagonal down, a 2 up, and then we're going to see early next week, we're going to see some disappointment. The blue chippers held it together today, barely down, but I think we could see something disappointing early in the week. Now, I've already said I would like to be wrong because it's way easier to make money as a bull than as a bear. So let's at least put in the fact that this could be a bullish 1-2, although you're going to have a hard time convincing me that this move up to that purple 1 looks decisively impulsive. To me, it looks like a 3-wave move into a 4, leading diagonal down to a 1-2, and we're going to go much lower. Okay, let's talk about XLF. So XLF, even better, because it's much, much further removed from it's in this case, the 13-month EMA. Let me actually change that so I'm consistent on all of these inputs. There we go. Just like DIA, not yet beneath it on a monthly time frame. On the weekly time frame, 3 consecutive weeks of losing, it's 13 EMA. And if I make that its 8 EMA, I think you're going to see that we're even further beneath it. And again, this is how character changes. This is how price action changes from bullish to bearish. Okay, now, just like all the others, I'm showing you consistency. I think we've reached a significant top. I do have currently counting a significant selling come in. If I'm wrong on XLF, of course, I'll embrace it if I'm wrong. If we can recover these daily and weekly moving averages, then I think we're seeing here an ending diagonal up to one more high. Okay, but it's going to take here some significant recovery next week to get me to say that. Okay, so now we want to look at the biggies. Everyone wants to see what's going on with QQQ and SPX. This is what gets all the headlines, and this is what has all the stocks that most of us really like to trade. So What's developing so far on QQQ on the monthly? What's developing is a bearish engulfing candle. Now, we're only a few days in. Yes, but what I'm saying is this kind of price action is how bearish trend changes developed. So this candle, it's begun like this. That's exactly how these candles began in October of 2018 and February of 2020. I'm just saying we need to be aware. We've got to be aware of what's beginning to happen here. Okay, so what have I changed on my counting? So I have placed the intermediate 3 top in place in the month of November. I've done that on QQQ and on SPX. I've aligned these. That's what I spent today doing. I didn't trade at all today. I spent today getting everything cleaned up and in alignment. And I'm looking anywhere between 330 and 350 for a possible correction on the Qs. Okay, now taking you here into the weekly chart. The weekly chart, it did do something good on the close. On the close, it held the 13-week EMA, which is, again, a little bit of good news. There's good news mixed in here with all of this. So what I need to also leave the possibility is that this is actually a smaller degree wave 4. Definitely want to include that as my bullish possibility. It already hit in between some fibs. And if we can see next week, so we can see closing strength all the way through the week, then I'm going to look at it as an opportunity just like early October. That was a wonderful run up, and maybe we get that wonderful run in. Okay, but the weight of evidence is showing me, I think there's enough out there to suggest that we're not quite done. Again, I would love to be wrong. Okay, digging down more into the details. So what I've decided to show you here on the details is the very worst outcome and then some other less bad outcomes. I've already talked about the good outcome. The good outcome is that wave 4 is in. Okay, now I have a hard time saying that a significant low can be put in on a Friday with a bearish engulfing daily candle. Now, maybe that's just me, okay? But I can't say with confidence that that low is in, okay? If we see the worst outcome I'm willing to chart, I have QQQ within a minor 3 of an intermediate wave A down, okay? And this, I just want to present, this is by far the worst outcome that I'm willing to embrace. And what that would suggest is that we are still within a seller's wave 3, that we're going to see more distribution. We're going to see more exiting during market hours on Monday and Tuesday. And that's what I'm going to present here, is that we're moving back within this previous range as we try to find a bottom here. Okay, now, if I'm wrong, and again, I'd actually prefer to be wrong, what I think could have happened, other than the less probable minor 4 wave, is that we could still be within the intermediate 4 correction, but we're working on a double zigzag. And this is actually a pretty appealing count. I think that what I have in blue is that the oversold conditions from today are going to get worked off next week. But just like we've seen, we're going to see more rejection at the downsloping daily MAs. Let me hop back to that daily chart. So we have seen rejection since November 23rd. Every single day except November 29th, which was just an awful suckers rally. That was by far the nastiest move this market has put on. We've seen rejection all the way through, including today, at the now downsloping EMAs. I would also point out today, the 80 EMA crossed under the 21. That in itself, you can't say, is the reason why I've switched to these bear counts, but I just want to point out that is how all significant corrections begin. They all begin like this, and this is what I'm starting to see. So if that double zigzag count is correct, Monday and Tuesday, we could see another suckers rally into those MAs that would then get rejected back down to some of these targets that are a little more clearly shown right in here. And some people get frustrated when I show a wide range of targets. Okay, now come on. Think about how far price has gone since March 2020. From 164 on the Qs to 400. And you're not going to give me $8 to $16 of leeway on price? Come on now. That's what happens. That's just math. That's what happens when price is extended so far. These potential correction targets also get a little bit wider. That's simply how numbers work. Okay, so I am certainly on guard and maybe even ready for that move up early into the week that would then get rejected under that blue count. But I also just feel like I have to point out to you the possibility of something much, much worse here in black. Okay, you're going to see similar things on the S&P. So in the S&P here, starting on the monthly, we've already seen this monthly shooting star resolve lower. That's what weak monthly candles do. They resolve lower. So this candle has already done its job. Is it possible, like the Qs, that a low is in place? Yes, you're going to see very nearly the same count. But just like the Qs, I don't think we're done. So I have us going anywhere between, let's say, the mid 4100s, maybe 4200. That would catch the 13-month EMA to below 4400. Okay, so again, like I've suggested, this is how all bad months develop. This is how the bad month of February developed. It didn't all of a sudden, just in 2 days, one day, go through these EMAs. It took a few. That's exactly what happened in October of 18. That's where I'm seeing the most potential similarity right now in trend change into the weekly. So yes, we did have a bearish weekly candle closing below here. It's 13 EMA. I think bulls would have wanted to have seen that recovered. It did bounce off its 21-week EMA, which, again, there's a little bit of good news mixed in, which gives some evidence, just like QQQ, that this minor wave 4 could be in place. Okay, I think at this point, probability suggests more likely that we're going to have to move all the way down here to the 50-week SMA. Okay, if I'm wrong, you can see right here fib and significant long-term diagonal resistance just below 5,000. Now, I haven't talked much about the very, very bearish count on the S&P. I think it's low probability until we see December close. But I do have that primary top in place. And this is different degree than what Elliott Wave International has. They also have a price correction of everything from March 2020 underway. And I think it's the lowest probability of all of these counts right now. But I would put that on the table, at least back testing the breakout that occurred after the election in November 2020, right here around 3,700. Okay, now let's move to what I think is more likely. And what I think is more likely is that today's bounce was a sucker's bounce, and we're going to see a continuation down. Now, just like QQQ, I got to leave that possibility that we've worked off some oversold conditions. Okay, now I want to talk a little bit about how some are interpreting here incorrectly RSI divergence. So I want to explain this for just a little bit. Okay. Now, there is no RSI divergence on today's closing low against Wednesday's closing low because the RSI is already higher. Is it possible to say that there is divergence against the November 26th low? Yes, that is there. because we did close lower and the RSI closed higher. That is how you would correctly identify divergence. Now, in my opinion, when prices in between those moves already spiked lower, you can't use a lower price spike to connect divergences across it. That's just my interpretation of the divergence. So I personally do not think there is daily RSI divergence, certainly not in the MACD that is opening up downwards at a 45-degree angle. Okay. Is it bearish that we closed beneath the 50 SMA? 2 out of 3 days. Okay. Not good, but not the end of the world, because we did see consecutive closes beneath it, 3 of them, all the way in the middle of September. That was recovered, but then we went lower. Okay, which leads me to the possibility that just like QQQ, let me find that short-term chart here, we could possibly see another X-wave bounce. Okay, so I'm wanting to leave that out there, that if that happens early in the week, what we would here be looking for is a 3-wave move into resistance at 4,600, that key psychological number, before we go down. But what I also just feel compelled to share is that there is a very bearish count in which early next week we could see a really, really drastic tumble. Okay, on the Qs did put in a non-overlapping potential 5-wave impulse down. Here it is from the 22nd. 1, 2, 3, 4, 5, up to a 2. And now I think we're developing that big 3 with a set of 1, 2s down. The S&P has to count different because this price on the 24th overlapped this price low on the 22nd. So it does have to be, I actually said those dates wrong. It's the 29th, overlapping wave 4 with the 23rd. 1, 2, 3, 4, 5 down. So it's kind of more like a motive diagonal. 2, a 2. And now just like Qs, we're working on developing that bearish 3 of 3 down. I think for aggressive bears, I think this close and this count was something to put some money on. I think that I have to alert you to the possibility that this could be the result. Okay, do I want it to happen? Of course not. People get hurt when the market goes down. It's very difficult to make money consistently when the market has decided to correct. Okay, just like the Qs, there is the possibility that this was a minor 4 low. So show you that again on the daily, just like the Qs. So these counts are synced. I like that. That this could actually move up here and approach that 5,000 level. You actually had seen that already on the weekly. Going to keep that on the table. With an outside red candle, possible. Certainly looks better here in SPX than it does on Q. Also, of course, that possibility that in the short term here, we've got that double zigzag, and this is actually a triple zigzag. So we've got a zigzag here with an X, zigzag here with an X, and then the final zigzag here. That's a possibility for us to see strength, at least a bounce early next week before a sell-off. Okay, so is it frustrating to see so many different possibilities? I'm sure it is. It's frustrating to me too. That's why this market environment is so difficult to trade, which means I think it's just time to watch a bit. It's certainly not time to enter anything with confidence. I think there is justification here with evidence I've shown you to be cautious. And I think going forward, we just need to see more days and more weeks put together before, with more confidence, I can say what's going to happen. Just trying to give you the evidence that I see. I do want to leave with a couple charts of some big names that I do not think closed well. And one of them is Tesla. So Tesla closed beneath its 8-week EMA. And as I've been saying on a lot of things, Movements like that are how big corrections begin. The last time that happened to Tesla, in a move that looks exactly like today, was in February of 2021. And we can see what happened after that. So I am certainly on guard that Tesla doesn't even need to go down to about 950, that it might actually be in a cycle correction. Certainly on my radar. And the other one that I want to show you is Amazon. On the weekly, it is not good news when a big name stock slices through moving averages, which is exactly what happened this week. When are some times that it happened in the past? Well, when we're looking at a situation of more closely defined moving averages together, started to happen in May, should probably have backed up into February. There's late February, it resolved lower. Here's July, slicing through, it resolved lower. Here's a lower low in October. And I think the suggestion, again, is that we have to at least be aware that not only are these indices going lower, obviously some of the biggest names within them are too. Okay, so I wish I had great news to share. I would say that this is probably the most concerned that I've been about the technicals of the market since I've started doing this. I did move almost everything into cash, and I thought that was the most prudent considering the most bearish possibilities that are out there I want to avoid. Over the last 18 months, things have been really good, and I certainly don't want any of that given back. So I will be really quick to redeploy if we see evidence on a weekly basis, for sure, that it's not just a bearish X wave, that we're actually starting a new impulse. And what I also wanted to share is, under the way that I chart and trade, is you should never be trying to find the bottom. If this turns into a new impulse, you should be looking for the higher low wave 2. And ideally, that is happening in conjunction with something like what happened in October. Here's the one up, here's the two down, and we got that massive move on the 13th, 14th, and 15th that confirmed the reclaiming of these averages. That's what I need to see happen in order for me to say that this purple 4 is in place. Okay, so I know that was a lot of info. I certainly hope that you survived in a way that allows you to keep carrying on next week. That's what it's about if you're doing this actively or for a living. You have to put yourself in position to survive. And we're going to come back on Monday and we're going to see what happens. I wish you a good weekend. And as always, we project, we monitor, we adjust. And we're just going to have to see a little bit more time and ticks go by for us to say with confidence that we're ready to enter into anything on a high probability.